Good evening, friends. Yes, so this is another critical part of the lectures. You can call it a flexi part of it. As Prince has said already, we are looking at identifying and managing tax in POS systems. It is important to be able to tell the component of tax. It is important to identify and be able to manage tax in POS systems. The reason we are in for this. Now, as we go, we want to look at what the introduction to tax is. What the introduction is. So we're looking at introduction to taxation in POS systems. So under this, what is it? When we talk of introduction to taxation in POS systems, basically tax is a compulsory levy. And when you say something is a compulsory levy, we are talking of something that is imposed upon you. You have no way out. You have no option. You have to pay. So it's a levy imposed by law on businesses and individuals. But in this case, we're focusing more on businesses because we are building a system. And so it's an imposition. That is simply put. We'll be looking at the various types of taxes, but we want to know again that we have reasons for doing this. So we say importance of applying the correct tax rates to products. Some will say 6%, 3%. When we get there, we get to know what we are talking about. And then we'll also be looking at the impact on business operations and compliance. So that basically is what it is. The types of taxes and products. We have sales tax. These are taxes that are applied on to goods and services at the point of sale. We'll be looking at more of this, but these are just introductions. You need to know that we apply some taxes on goods before they are sold and services. We also have a value added tax. That is VAT. That is where our focus is going to be on. This is applied at the stage of production and sale, VAT. We look also at excise tax. We just want to appreciate the kind of taxes we have. It's levies on goods produced locally. So we say excise tax. Custom duties, we know of them. These are applied on goods that you import from other countries. So that is basically what it is. We want to identify taxable and untaxable items. So we're looking at electronics, clothing, luxury items, alcohol, beverages, cigarettes as taxable. Non-taxable, we are looking at basic groceries, medical supplies, and educational materials. Please take note of this. As people developing POS systems, all these things I would say are laborious. They are too much for your consumption. But we are bringing it for you to really appreciate what taxation is about. When we talk of items upon which tax is applied, we call them, these are taxable products. You will not understand what we are saying because this, what I'm presenting here, is too skeletal. But what I want you to know is that there are certain items that tax does not apply on, and others have tax on them. So, basic groceries, we have medical supplies. Depending on your jurisdiction, we have educational materials. These ones do not have tax applied on them. They do not have tax applied on them. But um, I want just for you to appreciate, because if I go further on that, some of you may not get it. But know that we have items upon which tax is applied, on others that tax is not applied. Some will say tax exempt. I don't want to use the term. We say tax exempt because I know that when you want to do this, you would consult the accountant of the company. But as I speak with you, you must know what you're about. So we want to look at best practices for managing tax POS system. Configure tax settings correctly in QuickBooks POS. Regularly update tax rates based on regular regulatory changes. So here we are only trying to tell you that if you want to deploy POS systems, you must be conversant with tax rates. You must know the tax rates. Every tax that you input into the POS system has a rate. The rate is what we call the percentages. How much of what? How much of what amount? So it's always computed as a percentage of a certain amount. And so we say the tax rate. And that is what you should know and be able to apply them on the appropriate categories. That is what you must know. As for the benefit of effective tax management systems, it is obvious that when you manage your tax systems well, you'll be able to follow the rules and laws or regulations that are required. So these are basic things. We also know that it reduces financial risks and penalties. Once you are able to identify that this is the tax rate you have to pay, it is critical that you don't have or you don't go into conflict positions with the tax organizations like the GRA because you are applying the correct tax rates, and so you will not have problems or conflict with GRA. It enhances accurate financial reporting. That is pure. Once you apply the correct tax rate, you can really compute and put the proper financial report out. Of course, the system will generate it, so you don't have any problem. The only thing you need to do is to apply the appropriate tax rate. That is all you need to do. It improves customer transparency on pricing. Of course, we know that. So basically, those are the benefits for now. How do we implement tasks in QuickBooks POS? It says navigate into task settings in QuickBooks POS, adding task categories and rates, assigning tasks to specific products and transactions, generating tax reports for compliance and auditing. Sam Prince has talked about all these things. These ones are not what you need. These ones will be done by Sam Prince, and he has taken you through how to set up the system. What you need to know is how to apply the correct tax system. And that is what I'm going to do. We are looking at errors in tax computation. We say use automated tax rules. That is what you have to do to the system. That is what you have to do for the system. It's an incorrect tax rates applied, regularly review and update. So with all these, I want to go straight. I want to go straight to what you need to know. I want to go straight to what you need to know. I want to go because all these ones, Prince has taken you through. Yeah, so common challenges. You want to see common challenges and solution. Errors in tax calculation. These are the problems. If you do not seek the appropriate advice from the accountant, you may not be able to input the correct tax rates. And that is why it is important that even in the office of Sir Armstrong, I operate because that is my job. I provide financial and tax advice to him when he builds his software. And so it is important that you also speak to somebody to help you during your deployment so you can know what to do. Otherwise, you'll be having problems with errors in tax calculation and you will cause losses to the company. That's what you must know. Incorrect tax rates apply. It is important to regularly review and update settings. So, tax rates are issues of law. When the government of the day says the tax rate should be this, you only need to follow what law they have brought. But most of the times, it is important to talk to the financial people who will tell you how the application is done. And that is why we're saying that always have an advisor, a financial advisor, or a tax advisor who will take you through the process. It's a customer disputes on tax charges. Provide clear tax breakdown on receipts. For that one, once you are able to impute the correct tax rates, into the systems while deploying this, you don't have a problem because the customer will then be satisfied. But when during the deployment you are unable to input the correct tax rates, you have a challenge. So that is where the problem is. Conclusion and key takeaways. Understanding taxation is crucial for compliance and profitability. QuickBooks POS offers tools simplify, or QuickBooks POS offers tools to simplify tax management. Regular updates and best practices ensure smooth operations. Now, let me take this one very practically. Those ones are stories you heard. You can always read them and know. But what is expected of you? Two things and I go. Please take note of this. As somebody who deploys POS systems, it is important for you to know the current tax rates. Now, because we deal mostly or largely with retail shops, it is important to know the VAT rate that your customer uses. How do you know this? You must first talk to the accountant of the company or the owner of the shop. Now, they will tell you we deal with flat rate or standard rate. If the person is a standard rated person or registered person, then it means that the VAT for the person is 15%. Now, if the person is a flat rated person, then it means that the person pays, I'll put it 3% plus 1% COVID levy, making his 4%. But the standard rated person will still pay 2.5% NHIL or 2.5% National Health Levy and 2.5% get fined and another 1% COVID. So that person pays 6% in terms of levies plus 15% standard rate of VAT, which makes his own 21% deduction. You will not say deduction, but 21% addition to the sales amount. This is how you put it. So, this is what I want to explain. Now, what is your job? When you come to the setup, your job basically is that set the system up by saying that whatever revenue you make, your revenue is your sales price. Take note. Your revenue, the revenue of the company is the company's sales price. So the sales amount, the sales amount is equal to the revenue the company makes. Now, if the person is a standard rated VAT person, then after the revenue, the sales revenue, how much you sell the product, you must compute 2.5% of the sales amount to constitute get fund. Then you compute another 2.5% to constitute what? National Health Insurance levy. Then you again compute 1% of the same amount to give you your COVID levy. Now, after computing all this, you add up all these amounts and then you add it to your sales amount. So when you add up all these National Health Insurance, COVID levy, and get fund, it gives a total we call total levies. Those total levies, you add the total levies to your sales revenue. When you add the total levy to your sales revenue is the sales price. When you add your total levies to your sales price, it must give you what we now call taxable amount. This is the critical thing. It must give you what we call taxable amount. It is the taxable amount that you are going to apply the 15% standard rate of VAT on. This is where many people make a lot of mistakes. So you apply 50% on 15% on the taxable amount if the person is a standard rated person. Then whatever you get becomes the VAT that the person will pay. This is it. And that VAT is what you go to the GRA with when you are doing your computations. Please take note of this. If the person is a flat rate person, all you need to do is to charge 4%. The flat rate takes 4% and it's for retail shops. It's for retail shops. The person should have told you that he's a flat rated person. Then that one you use 4%. The 4% will be 3% VAT and 1% COVID. But please take note of this critical thing. Take note of this. When the person wants to calculate his profit or his sales for the day, let me put that, his sales for the day, the levies are the only thing allowed for deduction. So the levies will constitute expenses. I'm telling you this, though you are not an accountant, but because you are deploying the system, you must understand this thing. So you set up the system appropriately. Take note, most accountants fall foul to the law. And so you must understand this basic thing. Those who call themselves accountants largely are not all professional accountants. So they will lack some of these few things. But the very qualified accountants know this. You and I know that most of these shops only recruit account assistants. So if you don't know these things and you are depending fully on them, you make mistakes with your system. And that is why you have to consult professional accountants to help you, sometimes consultants. And that's why I'm here with Sir Prince. Very good. So your system must be put in a way or set up in a way that just at the click of a button, the levies will constitute expenses. But the VAT can never be an expense. The VAT can never be an expense when you are calculating your profit. Please take note. So when you are setting up the system, the VAT should not constitute expense, but the levies by law are approved to be deducted or allowable by the tax law. So these are the things. In fact, it is so because the standard that establishes revenue does not allow deduction of taxes as expenses. And again, don't make mistake. This is where it is very important. Don't make mistake and add your VAT and your levies to your sales revenue. If you do that, you will be inflating your revenue and you'll be paying more taxes at the end of the financial year. Basically, these are the things you need to know. These are the things you need to know when you are setting up simple systems like this. I may want to pause here so that if there are any questions, you throw them. If there are any questions, you throw them. or you can ask your questions through the support link. Ask your question, okay, through the support link in the description. Thank you.